welcome to Foxon Media Digital. My name is Okako. Today I'm delighted to be joined by Mark Shpizner, Head of Sales and Strategy Execution at Centerbridge Partners. Hi, Mark. It's great to have you on our channel.
Thank you so much. It's great to be here.
Thank you, Mark. So let's jump right in. Let's talk about future trends. What are some of the emerging trends in distribution channels that asset managers should be aware of?
Sure. Well, starting sort of from the top, Centerbridge is an alternative asset manager with 38 billion in assets under management, supported by around 290 professionals, mostly in just two places, New York and London. Our investor base is almost entirely institutional, think pensions, sovereign wealth funds, endowments, foundations, some family offices, and our re-up rate, meaning the percentage of our investor clients who commit to successor funds we raise, has typically hovered between 75 and 80%. That means, fortunately for us, we've been able to keep a relatively low profile and still steadily grow our business since our firm's founding almost 2 decades ago. So for a long time, the only marketing we did was via word of mouth, leveraging the personal relationships of our sales and investment professionals, our firm's founders, friends and family, hosting our annual general meeting, and occasionally attending industry conferences. Then, a few years ago, a few things happened. First, institutional demand for private markets investments surged, the result of stubbornly low interest rates, causing most institutions to look to the private markets for yield and returns. This ushered in a tidal wave of competition from traditional asset managers establishing and growing their private market capabilities, some from alt specialists looking to capitalize on enormous growth potential, and also, finally, a massive number of new entrants into the space. So all this swift increase in competition for institutional private investment dollars meant that firms like us would have to work harder to remain top of mind with clients and prospective clients and to tell the right story about our unique investing approach and value proposition. Then, when the world went completely virtual during COVID, our tried and true marketing channels evaporated. We, like everybody else, had to improvise. We created a LinkedIn page. We began submitting our fund data into more industry databases. And we made a conscious effort to have a more visible impact in our community, for example, through the CUNY Futures and Finance Initiative we launched in 2021 with Bloomberg and Goldman Sachs to prepare CUNY students for careers in the financial industry. Coming out of the pandemic, industry conferences and events exploded in number and frequency, opening a new marketing channel for us in selectively sponsoring the right events on the right topics targeted at the right audience for our investment offerings. So we don't just show up at conferences anymore. Our senior leaders take the main stage, do press interviews, TV spots.
Okay, so now let's talk about market conditions, right? So how have recent market changes influenced your approach to building and maintaining distribution channels?
One other outgrowth of the pandemic era is the proliferation of thought leadership. White papers, webinars, blog posts, sponsored feature stories and industry publications. And everyone is doing it, whether you manage $10 billion in AUM or 10 trillion. Now, we run a pretty lean operation in marketing and sales support functions in the first place. So we are thinking carefully about where to deploy resources in generating and disseminating content that showcases our investors' best thinking. We've also leaned into our relationships with major media outlets on big product launches, such as the announcement last September of our direct lending platform in collaboration with Wells Fargo called Overland Advantage. Lately, you see several leaders in asset management posting a lot of content and even short videos of themselves on social media. And LinkedIn seems to be the most popular venue for this activity. You also see some firms launching podcasts and educational academies to feature their investors' viewpoints and bring their investment philosophy and process to life. And we're watching these trends very closely.
How to best approach the challenge of maintaining brand consistency across various distribution channels?
Yeah, for us, it's pretty simple since we don't do much mass marketing in the first place. And when we put out content or make a public appearance, we tend to stick to our knitting in credit, private equity, and real estate, which are the three core pillars of our investment platform. We keep our outward focus on our investment outlook and views, and we generally don't take public positions on macro, social, or geopolitical issues. I also think our dedicated focus on institutional investors helps us keep a consistent brand. We don't have to respond to the highly diverse demands of the retail wealth investor base, for instance. Though one thing we're starting to grapple with, particularly as we expand our reach overseas, is how to maintain a consistent brand across geographical regions where we might have a stronger reputation in one asset class or capability somewhere, a stronger reputation in another somewhere else, and maybe be completely unknown in other places.
Let's talk about sales strategy, right? So, how do you leverage data analytics to inform your sales strategy and improve said distribution efforts?
Absolutely. This is a core part of my role, and I work with large sets of industry and competitor data every day. There's so much intelligence out there on where institutional investors are making and planning allocations, which consultants are conducting or have announced imminent mandate searches, which investors have committed to funds sponsored by close peers and still have ample capital to deploy, and which competitors are perennially underperforming, and who are the investors with large exposure to those managers. Our investor relations team at Centerbridge has established a mini command center to monitor and client and competitor intelligence and issue potential sales leads to our relationship managers. We're also highly data driven in assessing where to invest for growth across our sales team to accelerate revenue generation in the fastest growing investor segments and geographical regions. And over time, we're getting smarter about putting our CRM system at the center of all this intelligence and generating reporting and reminders for our sales team to keep up the pace of activity in pursuit of the opportunities we're flagging for them, thanks to all these data. As I mentioned before, we have a pretty lean sales team here, so it quite literally pays for us to develop ways like this to make more efficient use of our sales team's time.
And lastly, what are you looking forward to at TSAM New York 2024?
I'm looking forward to meeting like-minded industry leaders and comparing notes on where the big plays are.
Well, Mark, thank you. Thank you so much for joining us today and sharing some insights.
Absolutely, it's my pleasure, and thank you again for having me.
Thank you, everyone, for watching. Be sure to follow our YouTube channel for more content on all the latest opportunities and challenges in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.